Mental accounting trap: how you secretly sabotage your own savings. Imagine this. You've been working hard all month, finally got your salary in the bank. You tell yourself, this time I'm going to save seriously. But then Friday comes, you see a nice pair of shoes on sale, and suddenly that savings money feels different from your fun money. Before you know it, the shoes are in your bag, and your savings plan quietly disappears. Sound familiar? You're not alone. Most of us do this without even realizing it. We think we're being smart with money, but there's a hidden psychological trap that's quietly destroying our ability to build real wealth. It's called mental accounting, and it might be the biggest reason why your savings never seem to grow, no matter how much you earn. Let me paint a picture you probably recognize. You have different mental buckets in your head for your money. There's the rent and bills bucket. That one feels serious and untouchable. Then there's the groceries bucket. But then you have the bonus money bucket or the tax refund bucket. That money feels like extra, like it doesn't really count the same way as your regular salary. So when a friend suggests a weekend trip or you spot a new gadget you've been wanting, you dip into that extra bucket without thinking twice. Here's the scary part. Your brain is treating the same dollar differently depending on where it came from or what you label it. $100 from your salary feels painful to spend on something fun. But $100 you got as a gift or from selling something old, that feels much easier to blow on dinner or shopping. The money is exactly the same value, same purchasing power, yet your mind puts it in different mental accounts, and that changes how you behave with it. This is mental accounting in action. It was first studied by Nobel Prize-winning psychologist Daniel Kahneman and his colleague Richard Thaler. They discovered that people don't treat money as one big pool. Instead, we create separate mental categories, and each category comes with its own rules about what's okay to spend and what's not. Think about your own life for a second. Have you ever received a tax refund and immediately thought, "Great, now I can buy that thing I wanted"? Or maybe you got a small raise and suddenly started eating out more often, telling yourself, "I can afford it now." Meanwhile, your main savings account barely moves. That's the trap working silently in the background. The dangerous thing is that mental accounting feels completely logical to us. It gives us a sense of control and makes money decisions feel simpler. But in reality, it's sabotaging your future. Every time you treat fun money differently from savings money, you're making it harder to escape the cycle of living paycheck to paycheck. You're keeping yourself stuck in that uncomfortable place between "I'm not poor" and "I'm still not wealthy." And here's what makes it even worse. This trap doesn't just affect small purchases, it affects big life decisions too. People often keep money sitting in low-interest savings accounts while carrying high-interest credit card debt because the debt feels like it belongs to a different mental account. Or they'll gamble with house money, winnings from betting, much more freely than money they earned through hard work. Right now, pause for a moment and ask yourself, what mental accounts have I created for my own money? Is there emergency money, vacation money, guilty pleasure money, or future self money? And most importantly, are those accounts actually helping me build wealth, or are they quietly leaking it away? Understanding this is the first step to breaking free, because once you see how your brain is secretly categorizing your money and changing your behavior, you can start making better decisions. You can stop treating the same dollar differently just because of the story you tell yourself about where it came from. In the next part, we'll dive deeper into exactly how this mental accounting trap shows up in everyday situations, and why it's so hard to notice when it's happening to you. You just saw how mental accounting creates invisible buckets in your mind that change how you treat the exact same money. Now let's look at how this trap shows up in your daily life, often without you noticing until it's too late. Picture a typical month. Your salary hits your account on the 1st. You mentally label most of it as necessary expenses: rent, food, transport, bills. That bucket feels serious, so you try to be careful with it. But then a small bonus or overtime pay comes in. Suddenly, that money goes into a different bucket: extra cash. Because it feels like a bonus, your brain gives you permission to spend it more freely. You treat yourself to better coffee, a new phone case, or a night out with friends. the money disappears fast, and your main savings account? It barely grows. This happens even with money you've already saved. Many people have a savings jar or a separate account they call for the future. But when something tempting comes along, maybe a limited time discount on a vacation package, they think, it's okay to take from the savings just this once because it's a special deal. The moment they move that money, it stops being future money and becomes spending money. The mental label changes and the discipline disappears. Let me make this feel even more real. Suppose you're trying hard to save for a house or to start your own small business. Every month you put aside 10% of your salary. That feels good. But then your friend gets married and invites you to the destination wedding. You tell yourself, this is a once-in-a-lifetime event, and you pull money from your house fund because it now feels like it belongs to the important celebrations bucket. The same cash that was protected for your big dream is now spent because you changed its mental category. Why is this trap so powerful? Because it feels emotionally comfortable. Your brain hates the pain of spending hard-earned money on luxuries, but it feels much less painful to spend found or extra money. This emotional shortcut saves mental energy in the moment, but over years, it quietly drains your wealth-building potential. Another common example, credit cards and points. When you pay with cash or from your main account, you feel the real cost. But when you use a credit card that gives cash back or miles, the purchase feels cheaper or even free because you're earning rewards. Your brain puts that spending into a rewards gain bucket instead of the real money leaving my pocket bucket. As a result, you spend more overall without realizing it. Or think about how people treat windfalls. Studies show that people are much more likely to spend a tax refund on consumer goods than the same amount added gradually to their salary. The refund feels like free money, so the mental accounting rules for it are much looser. That's why so many people get a refund and end the year with nothing extra saved. The money was sabotaged by its own label. Here's the painful truth. While you're busy protecting one bucket and freely spending from another, all the money is actually the same. Every dollar you waste from the fun or bonus bucket is a dollar that could have been working for your future self, earning interest, building an emergency fund, or funding the life you really want. The worst part is that mental accounting hides in plain sight. You don't feel like you're making bad decisions. You feel like you're being reasonable. I deserve this. Or it's only a small amount. But those small decisions compound. Over time, they create a huge gap between the wealth you could have and the savings you actually have. If you're nodding along right now thinking, this is me, that's good. Awareness is the beginning of change. You're starting to see the invisible rules your brain has been following. And once you see them clearly, you can start rewriting those rules. In the next part, we'll look at the real cost of this trap. Not just in lost money, but in the mindset of fear and scarcity it keeps you trapped in. We'll also start exploring simple ways to spot when mental accounting is sabotaging you in the moment. You've now seen how mental accounting creates different buckets for the same money, and how it shows up in everyday spending decisions. Let's talk honestly about the real price you're paying, not just in lost dollars, but in the mindset that keeps you stuck between fearing poverty and never truly aiming for wealth. Every time you move money from your savings bucket to your treat myself bucket, you're reinforcing a hidden belief. I'm not someone who can hold on to money. That small action trains your brain to see wealth as temporary and fragile. Over months and years, this creates a quiet fear of poverty that never fully goes away, even when your income grows. You might earn more, but you still feel one unexpected expense away from stress. That fear keeps you playing small instead of confidently building toward real financial freedom. Let's make this personal. Imagine you finally get a raise, something you've worked hard for. Instead of calmly increasing your savings rate, your brain creates a new extra income bucket. You upgrade your lifestyle a little. Better meals, nicer clothes, maybe a new subscription. It feels justified. But because of mental accounting, you don't treat that raise as permanent wealth-building fuel. You treat it as permission to spend. 6 months later, your savings haven't grown as much as they could have, and you still feel the same underlying pressure about money. The raise didn't move you closer to wealth. It just raised the level at which you're still living paycheck to paycheck. This trap also affects how you handle losses and gains differently. Suppose you lose $200 from your main checking account. It hurts deeply because it comes from the important money bucket. But if you lose $200 because you spent it impulsively from a fun money bucket, the pain feels much lighter. Your brain forgives the second loss more easily. That inconsistency stops you from learning from mistakes and keeps the sabotage cycle going. The deeper cost is mindset. When you secretly sabotage your savings through mental accounting, you stay trapped in a scarcity mentality. You focus on avoiding poverty rather than creating abundance. You celebrate small wins like, "I didn't overspend this month," instead of asking bigger questions. How can I make my money work harder for me? Or, what would my life look like if I consistently protected every dollar for my future? Many people feel this internal conflict every day. They want to build wealth, but they keep leaking money through these invisible mental rules. They tell themselves, "I'm bad with money," or "I just don't have enough discipline." When in reality, it's not about discipline. It's about understanding how their brain is quietly rewriting the rules for different dollars. Here's the good news. Once you clearly see this trap, you can start breaking it. The first practical step is to stop creating so many mental categories. Try treating all your money as one single pool. When a bonus comes in, don't ask, "What fun thing can I buy with this?" Instead ask, "Where in my overall financial plan should this money go?" Automatically move a fixed percentage of every income source, salary, bonus, refund, side hustle, straight into your savings or investment account before you even see it as spendable. Another powerful way to catch yourself in the moment is to pause and ask one simple question whenever you're about to spend. If this money came from my main savings account instead of this extra bucket, would I still make this purchase? This single question forces your brain to treat the money fairly and reveals when mental accounting is influencing you. You can also make your accounts work for you by reducing the number of mental buckets. Have one main spending account and one dedicated wealth-building account. Pay yourself first by setting up automatic transfers the day your salary arrives. When money never lands in the spendable bucket, it becomes much harder for mental accounting to sabotage it. These small changes start shifting your identity from someone who tries to save to someone who naturally protects and grows their money. You begin moving away from the fear of running out and toward the confidence of building real wealth. In the final part, we'll put everything together with clear, practical strategies you can start using this week to completely rewire how you handle money and escape the mental accounting trap for good. You've now understood what mental accounting is, how it secretly shows up in your daily decisions, and the real cost it has on both your savings and your mindset. It's time to take control. Here are practical, step-by-step strategies you can start using this week to break the trap and shift from fearing poverty to confidently aiming for wealth. First, simplify your money system. The more mental buckets you have, the easier it is for the trap to work. Reduce them to just two main accounts, one for daily living and one for building wealth. Decide on a fixed percentage, for example, 20% or 30% of every single income that comes in, and set up an automatic transfer to your wealth account the moment money arrives. Whether it's salary, bonus, freelance payment, or even a small gift, treat it all the same. Don't wait to see what's left. Pay your future self first. This removes the emotional decision-making where mental accounting loves to sneak in. Second, use the one pool rule. Whenever you receive any money that feels like extra, immediately ask yourself, if this was part of my regular salary, would I spend it this way? This simple question forces your brain to apply the same strict rules to every dollar. It breaks the illusion that bonus money or refunds are somehow less valuable. Try it next time you get unexpected cash. You'll be surprised how quickly the urge to spend weakens. Third, make your savings invisible and untouchable. Move your wealth building account to a different bank or set it up so that it's not easy to transfer from on a whim. The harder it is to access emotionally, the less likely your brain will relabel it as spendable money. Some people even use apps that automatically round up purchases and send the change to savings, or investment accounts that lock funds for a certain period. The goal is to create physical and emotional distance so mental accounting can't easily change the category. Fourth, track your spending with purpose, not guilt. For the next 30 days, every time you spend money, quickly note which mental bucket your brain wanted to put it in: fun, necessary, reward, or guilty pleasure. You don't need to stop spending, just become aware. After a week, you'll start noticing patterns. That awareness alone weakens the trap. Over time, you can consciously move more categories into the wealth bucket instead. Fifth, reframe how you talk about money. Stop saying, "I can afford this because I got a bonus." Start saying, "Every dollar I earn is working toward my freedom." Small changes in language rewire your mindset from scarcity to abundance. Celebrate consistency, not just big wins. When you successfully protect a bonus instead of spending it, acknowledge that as a real victory. It's proof you're becoming someone who builds wealth naturally. Remember, this isn't about becoming perfect or never enjoying life. It's about stopping the secret sabotage that keeps you stuck. You can still enjoy dinners, trips, and nice things, but only after you've already taken care of your future self. When your wealth account grows steadily, the fear of poverty fades, and you start making decisions from a place of confidence and possibility. Start small this week. Choose just one strategy, maybe the automatic transfer or the one pool question, and commit to it for 30 days. Watch how your savings behave differently. Watch how your confidence grows. Each time you catch mental accounting trying to trick you and choose differently, you're training a new mindset. The mindset of someone who respects every dollar and aims for real wealth. You now have the knowledge and the tools. The only question left is, will you keep letting invisible mental rules control your money, or will you take charge and build the financially free life you deserve? The power is in your hands right now. Start today. Protect your money like it all belongs to your wealthy future self, and watch how quickly your reality begins to change. If this video helped you see your own money habits more clearly, drop a comment below and tell me. Which mental accounting bucket do you catch yourself using the most? Share one strategy you're going to try this week. Your story might help someone else break free too. Let's support each other on this journey to wealth.